Londra'dan herkese merhaba. Bu bölümde Londra'da değerli bir konuğumuz var stüdyomuzda. David Lubin ile birlikteyiz. Kendisi Chatham House'un kıdemli araştırmacısı. Hi David, thanks for joining our program.
My pleasure.
First of all, we have left behind 3 months of this year, and we have lived through a lot. Venezuela crisis, Greenland crisis, trade war, and everything. But Iran war has changed a lot.
Yeah.
So my first question, what is the true economic cost of this war to world economy?
In broad terms, the phrase that most economists will rely on to answer your question is stagflation, which is the simultaneous downward pressure on economic activity and upward pressure on inflation. And so for the global economy as a whole, stagflation is the right way to think about the economic effects of the war. But the distribution, the precise distribution of stag versus inflation will change depending, from country to country. So for example, in the United States, I think it's probably true to say that most of the effect is an inflationary effect. Inflation will be shocked upwards because of the increase in gasoline prices, and the Fed may or may not have to react to that. Now, that may have some negative consequences for economic activity, but I think primarily the shock is an inflation shock. When you move towards Europe and Asia, for example, then stag becomes a more prominent phenomenon. I mean, if you're a low-income country that is dependent on oil imports and your economy uses oil and energy inefficiently, then you are going to suffer a real negative economic shock. And we've already seen that in the case of India, Philippines, Bangladesh, for example, where restaurants and shops are closing, domestic air travel is being restricted, workers are being encouraged to stay at home. So there's a really immediate and very visible negative shock to economic activity, while those countries may also suffer an inflation shock. Richer countries tend to be better able at protecting their citizens. So, for example, in Japan, in Korea, fuel prices have been capped. So, the government can use budgetary resources to protect households from the rise in energy prices. So in general terms, the distribution of stag inflation changes from country to country, but overall, that's the net effect is really not very unpleasant.
Yeah, so some countries will feel much lower growth and some will feel much higher inflation. But how do you think the people on the streets will live through the consequences of this war? Can we say that shopping and flying will be more expensive from now on?
I think, yes, I think that's a reasonable way to think about things, just because it seems to me that even if the war comes to an end relatively quickly, it's likely that there will be a kind of security premium on the price of energy after this because of the vulnerability that we've all seen. I really don't have a way of estimating that, but because it so much depends on the terms on which the war ends. But if Iran is still tempted to use its leverage, its international leverage, by closing the Strait of Hormuz, then a security premium will be added not only to energy prices, but it's also worth remembering all the other inputs: helium, sulfur, ammonia, urea, aluminium, petrochemicals that come through the Gulf, whose supply has been restricted. So that security premium may not just be attached to the price of energy, but also to all the other intermediate inputs that whose dependence on the Gulf, the world economy has a lot of.
Can we say that this war has something to do with the trade war and the relations with China as well?
I think people have argued that, but it's a funny kind of argument because certainly from an economic point of view, China is pretty comfortable in this crisis. Oil does not represent a meaningful percentage of Chinese energy production. China is very dependent on coal, on hydro, on solar, on wind, on nuclear. Oil is only like 4% of China's energy mix. Iranian oil continues to be shipped to China. China has a ton of oil reserves. It's got 1.4 billion barrels of oil reserves. So the war is leaving China relatively insulated. And to the extent that China is affected by the increase in oil prices, well, China has a problem with deflation at the moment. So anything that kind of shocks the price level upwards is not any big inconvenience to the Chinese economy. China might suffer to the extent that the rest of the world suffers a demand shock, and then Chinese exports suffer a sort of negative external shock. But right now, the Chinese economy looks like a relative winner. So if the objective of the war was to impose some pain on China, at least in the short run, it's difficult to see where that pain comes from.
Okay. Because some say that this Iran war is not just Iran war, it is more than that. It's like a global reordering. It's not a temporary shock, but it's a new economic order. Some say that, and they somehow relate with relations with China as well. That's why I asked.
Yeah, no, fair enough.
Okay, so what about Turkey? How do you think Turkey is getting affected from this war?
Well, obviously, Turkey's a very large energy importer. And so the current account deficit is going to be the biggest sort of victim of the crisis. You know, last year Turkey's current account deficit was $30 billion or so. This year it will be significantly higher. And then, you know, the question is, well, given the negative shock that the Turkish economy faces, what's the right policy response? So far, the Turkish authorities have been making, I think, quite a lot of effort to limit the way in which the lira acts as a shock absorber. You know, normally when you have a floating exchange rate, when a negative shock occurs, you let the exchange rate weaken in order to allow the economy to kind of reflect the new reality, to allow the economy to adjust to that shock. The lira has depreciated by a tiny amount since the conflict began, because the central bank's preference has been to sell assets, to sell dollars. Now, the result of that has been to seriously deplete Turkey's foreign exchange reserves. Net foreign assets of the central bank have fallen from about $70 billion at the end of February to about $20 billion now. Some of it because of the gold and the fall in the price of gold, but a lot of it is, you know, selling dollar assets in order to intervene in the foreign exchange market and limit the depreciation of the lira. Now, if you know that the conflict is going to be short-lived, that might be a rational strategy. But the problem is that foreign exchange reserves are a finite resource. And so, given the fact that, you know, we may be victim to a number of future shocks as a result of this conflict, it may have been wiser for the Central Bank of Turkey to allow the exchange rate to bear more of the burden of adjustment rather than just relying on selling dollars.
Mm-hmm. So do you think at one point an increase in the exchange rate will be inevitable?
It's possible. I mean, it really depends on how the conflict evolves. I mean, you know, for all we know, the conflict might be over tomorrow and everybody's calm and you know, no problems. Maybe that's a smaller probability than all the other scenarios, but, you know, you can't rule it out. So it's very difficult to answer your question until we really know what the scale of the conflict is going to be.
An open rate hike is needed in Turkey.
Well, the whole point of selling dollars and relying on selling foreign exchange and gold in order to limit the depreciation of the lira is precisely in order to avoid the need for a rate hike. You know, the inflation rate of tradables goods, of goods in Turkey is obviously very, very sensitive to the exchange rate. And by minimizing pressure on the lira exchange rate, the central bank is hoping that goods inflation remains well contained and that prevents the need for any rate hike. But the longer the conflict goes on, the more difficult it will be for the central bank to continue justifying relying just on dollar sales to manage the foreign exchange market and manage the consequences of this crisis.
When you compare Turkey with its peers in the emerging markets league, what kind of a picture do you see?
Well, Turkey is not alone in having relied on selling dollars. I mean, there are a lot of countries that want to limit the depreciation of the exchange rate that results from this crisis. But in the scheme of things, the Turkish lira has depreciated by quite a small amount. I mean, if you look, for example, not too far away from Turkey, the Egyptian pound has depreciated by 10%. The Chilean peso has depreciated by 7.5%. So other central banks have chosen a more, if you like, liberal approach to managing this. Turkey is much more interventionist.
So what is the biggest economic risks for Turkey stemming from this war, and also opportunities?
Obviously, the biggest risk is this security premium in the price of energy going forward. You know, if the price of energy is kind of permanently shocked upwards, then that's a sustained negative shock to the Turkish economy. In terms of opportunities, well, I guess Turkish construction firms who already have plenty of business in the region might have more to do in the Gulf, given all the damage that's been caused. But in general, given that this seems to be part, I mean, as you were describing earlier, Berfu, this is part of a kind of general collapse in global order.
And
for an open economy like Turkey, in order to kind of promote exports, in order to have confidence about the future of trade flows, global order is an important variable. It's worth noting that in the last 200 years, there have been 2 episodes in which global trade growth has thrived. The first was in the second half of the 19th century under Pax Britannica, and the second was in the second half of the 20th century under Pax Americana. And I think that without a global leviathan, or without a global hegemon providing stable order, it's difficult to be confident about global trade growth, and that obviously affects Turkey negatively.
Okay, I think we'll continue to talk about this global reorder. Thank you so much, David Lubin, for joining our program.
My pleasure.
David Lubin'le buluştuk. Chatham House'un kıdemli araştırmacısı kendisi. Sözü İstanbul'a bırakalım.